and welcome to the Fred Report conference call for February 3rd, 2011. We've obviously had an interesting few days since the last call. Currently, the stock market is basically still in the same range it was in. I got to say it's looking a little better in that we did penetrate the 130 area for a couple of days. We're below it again now. And there's two things we should note. I guess the first one is our moving average system, the 5 is still above the 20, and even though the indicators are looking a little tired, that says that the trend is still slowly up, and the market seems to be going slowly up. Second of all, we still haven't had any sort of a breadth surge to get the McClellan oscillator to move above 100 and so on and so forth. So breadth and those indicators still look, the way I wrote it down this morning was iffy but not awful. And third, my monthly Fred's price oscillator is suggesting that we could have a little bit of trouble here in February or March. So, caution flags are still on, and I especially want to, mention to everybody, this news environment is going all over the place. We're seeing now, I guess, even as we speak, there's more people being shot in Cairo. And I can't help but think that sooner or later the market's going to think that Israel and Jordan, both of whom are having trouble with their populations right now, they're having these demonstrations, also happen to be the only countries in the region that really have peace treaties with Israel. And this is a big change. If those treaties get abrogated, there could be some real issues there, and everyone seems to be just assuming that democracy is going to take over and this is all great and Hamas has nothing to do with any of this and everything's fine. But, if it turns out not to be fine, we could definitely have some trouble. So I'm very comfortable holding some cash here. I guess the guys that I'm talking to are holding around 20% cash here, looking for the possibility of a drop in the market. We've got some good stocks in our sector review. Most of the people that are holding 20 to 30% cash are actually up on the year, I'm told by some. So, we're doing okay, and I think we're still kind of in no man's land here, waiting to see this Middle Eastern thing resolve. And I do think if the Middle Eastern thing resolves favorably, you're going to see the market up, and that's the way it is. Also point out the Dow transports still look terrible. Some of that is obviously due with weather-related stuff. But, whatever it's due to, we've seen all sorts of situations where in strong economies, the Dow transports and crude oil both make new highs together for months and months and so on and so forth. So I'm taking this transportation's indication as being at least somewhat serious and wanting to be a little bit careful of it. So I guess to recap on the stock market here, we would say, still an uptrend, not great. Definitely hold some cash if you're stopped out of stuff. I wouldn't be in any hurry to redeploy it. And let's just see what the weekend brings and what next week brings. February could be a down month, and if it is, we'll put that cash to work. In terms of the bond market, it's still showing accumulation, but it's drifting down. The moving average systems on that have been negative for a while. We note that when you get very strong signs of accumulation in a bear market, sometimes the rally is quite sharp. That rally to 108, 110 last year came after showing accumulation for several months. However, I do think this is still a decent place if you're a client investing in bonds to look at the bond market. I'm still expecting a pop-up in bonds followed by grudging decline to end the year lower, which would be rates dropping now and then slowly creeping back up to end the year about here, a little bit higher as far as rates are concerned. We also mentioned a couple of times the muni markets, and when you look at MUB and CMF and NYF, those actually look a little bit better than Treasury bonds. They're definitely holding on, and that's interesting. And the fact that the press has been so incredibly negative on these municipals, very risky players, if you're not risk adverse, can probably start to look at buying some of these, with the idea being that you are taking a rather nice risk. But we know we have some clients back in California. The California Municipal Fund, the CMF, has actually come out of its little bottoming formation so far. Any move above 101 on that could move you to 104, 105. So if you're looking for those bonds, this is probably a place to leg in, realizing that you are taking some risk. Looking at currencies and the dollar looks to have stabilized and actually is starting to rally. I think the rally in the dollar is going to be a little bit more versus the euro. We follow the euro with FXE, then the yen, which is FXY. But given that there's a big gap on the FXE down around 130 that could fill, that would be a nice drop from here. And the interesting thing about that is commodities. When we look at the JJG, it has been rallying in somewhat of a contra-seasonal fashion. We mentioned that in our monthly research piece, that it is comprised of corn, wheat, and soybeans, but mostly corn and soybeans. Those markets have a tendency to rally in the summer. Wheat has a tendency to rally in the winter. And so if we get a drop in that JGG into May or so, we would be very, very interested in that. If you're in the JJG, it certainly looks okay, and I would hold it through a drop. I think that's going to be a big market this summer. Looking at DVC, the sort of commodity index we follow here, got very close to 30, 29.20 or so. It looks like it could sell off a little bit in sort of a spring decline, which usually happens. Oil the same way. It rallied back up on the Egyptian news, and it's sort of stabilizing. And gold the same way. I'm not expecting much out of those markets. They could go a little lower. We've got 126 as a possibility on on GLD, but we are still going to maintain our target of 152 16 months out. Silver looks like it's rallied back up and is starting to turn back over. A move down on SLV to 24 would not be out of the question. So still looking at some seasonal type movements in the commodity markets. With that, we're going to get to some of the individual stock questions that we have here.